I did not have a Roth IRA when I graduated college, and I am a CFP, a certified financial planner. I took econ classes. I took all the business classes. I was a finance major, and I left college without all the tools that I should have. And the reason for that is I didn't have a professor make me take action. They would put spreadsheets and these fancy financial guides in front of me and say, okay, look over that later and let me know if you have questions. And there was so much going on, I didn't prioritize it. Should I have? Different conversation, but I didn't take action. I'm just being honest. So why am I making this video? Well, this is the video that I wish I had when I graduated college or high school, where now I would have been in a great financial spot. Fortunately, I'm in a good position, but I could have been in a better position if I had known these things earlier, which still gives me some frustration today. My brother has a shirt that says why I love Roth IRAs, and we joke about it because if I wasn't interested in these things, he would have never known about it. And he said, if I found out about these Roth IRAs when I was 50, I would be pissed because no one told me about this. And my brother went to school. He was educated and he didn't take action. So here's what I'm going to do today. This is not my traditional retirement case study or talking about tax planning in depth. This is a guide that you can share with your child, with your friend, with your neighbor, someone who's just starting out financially and wants to get a good sense of what do I need to know, but not just education, it's education with action. So check this out. I'm going to tell you the story of a professor that led me to not take action. So here's an example. I'm going to tell you what hopefully makes you really excited and cannot wait to start opening accounts and investing and saving, because it took a few tries for me to eventually even do it. And I was working at one point, guys, at a big financial institution, the Beverly Hills parking and the lights and the cars. And I mean, I did not fit in with that group because I bring my lunch to work and I'm just not like these people. Nothing wrong with that, but I'm just not. And so I was too embarrassed to ask, hey, should I get a Roth IRA now? Because I felt like I should already know that. So my Roth IRA wasn't open until I was 23 years old. Now, some of you are like, well, that's still early compared to, yeah, we could compare all day, but all that matters is that you eventually get started. I know people my clients who are like, hey, my child is doing a little bit of work for us right now. Can we open it for them at like 9? Yeah, of course. Like there are certain things that you can do. So I don't want you by any means to beat yourself up. I want to show you how to take action, and let's do it right now. So there are 2 guides that I'm going to talk about today, and I'm not going to spend a ton of time on them. I'm going to show why, but you're still going to take action. So this is the first one. All of what I'm showing today is inside my Early Retirement Academy, which is available in the description of this video. And this says, what issues should I consider when starting out financially? Talking about basics of personal finance and assets and liabilities and all these things. Okay, so here's what I had a professor do. Literally, I'm going to pretend to act it out right now. My professor said something like this. Okay, everyone, so you can see on your screen here, you all have a great chart in front of you, and there's some check boxes there. And I'm sure many of you have heard a lot of these things about, hey, make sure to, materialize certain things in your life, and how much income have you received, and are you expecting gifts and inheritance and saving for college, and making sure you understand credit cards versus debit cards. And I'm sure a lot of you know this stuff already, so why don't you just go ahead and take a look at this. If you have questions, you can always come to me during office hours. I mean, I'm pretty busy, so I'm not very available, but if you would like, of course, I'm always open for questions. It wasn't exactly that. I'm just making it a little more dramatic than it needs to be for no good reason other than it's fun. And I didn't take action. So should I have? Of course, but I didn't. I'm just being honest. They had said, here's a guide and good luck. Now, this is one guide. Another guide that I'm going to talk about today is what issues do I need to consider as my child becomes independent? So that is really it for you, because there are some considerations that people forget here. So here are 2 guides, right? I'm not going to spend a ton of time going over all of these, but what I had someone else do is something that was very effective that I'm going to share with you first. But one more story of what did not work. I promise there's a reason why I'm going through this, is I had my dad and my mom were great at making money, but not the most financially savvy in terms of investing. That was not their thing. They're creatives. They make movies. They're amazing, lovely people. But finances were not their thing. And so my dad once had a friend talk to me about finances. And this friend said, hey, Ari, you should really look into compound interest. And hey, how cool is this standard deviation thing? And to be honest, he was just talking above me. I didn't know what he was saying. So here I am pretending to pay attention. I don't want to disappoint my dad and have my friend go to my dad and be like, hey, look, your son wasn't listening and wasn't really I feel like I was wasting my time. I didn't want that to have happened. So rather than me focus on learning, I was focusing on not upsetting my dad's friend so he wouldn't go tell my dad that I wasn't paying attention. So all of the reason I'm telling you this is it needs to click in life. And at some point it will click and you'll go, wow, I've got the education I need and I'm going to take action. But it didn't click for me right there. So what eventually clicked was what I'm showing you on my screen right now. This is a time value of money calculator. That's what TVM stands for. And there's advanced versions that you can go and have tons of fun here. And maybe if you watch this video and become a finance major, you'll eventually want to take a deep dive here. But I'm going to keep it really simple for today. For today, when people talk about compound interest, what they'll often say is, hey, it's the eighth wonder of the world and you can invest and it's a beautiful thing. And it's accurate. But when I was told that didn't make me take action. I'm like, okay, great. It sounds great. People often tell the story of, would you rather have $1 million in 30 days from now or double a penny or have a penny double every single day? Excuse me. I already messed it up. And if you doubled a penny every single day, you would end up with more than $1 million. And so people go, wow, that's amazing. It's 1 cent, 2, 4, 8, 16. And then as you continue to compound that, it shows the value of compound interest. But when that example was told to me, it also didn't click. But this is what clicked. So someone said, hey, imagine you start with no money. I'm like, that's me. I have no money. And imagine you save, I don't know, let's just say $7,000 a year. And I was like, why 7,000? They're like, I'll tell you later. So $7,000. In the future, we're going to have some amount of money. I'm like, okay, I mean, I can follow this so far. And they said, let's pretend you get a 10% rate of return. I'm like, rate of return? Like, do I just guess or do I just pick Apple? Like, what do I do? And they're like, no, that's the historical average of the S&P 500. And I was like, S&P 500, I've heard of that. It's like a lot of companies, right? And they're like, yeah, it's the 500 biggest companies. There are more, but we're just going to use this as a starting spot. I'm going to let you in a moment pick what the number is. And I was like, okay, I'm intrigued here. And they're like, let's just assume you do that for 30 years. I go, 30? Am I even going to be alive then? I'll be what? I don't know, 50. This was when I was, 20. And it, actually I was 25. No, how old was I when this was first explained to me? I think I was 20, but when it eventually clicked was later. So this is what someone did. It was, I have no money. I need to save 7,000 a year. In the future, I'll have something. I get a 10% return. I do that for 30 years. And they click this button, future value. And this is what came up on the screen, $1.15 million. And I went, are you telling me I'll be a millionaire if I save $7,000 a year for 30 years? And they said, yeah. I said, wow, that is cool, but like, why is it so cool? And then they said, let's pretend you didn't invest any of this money. Okay, so pretend you didn't invest it and you got a 10% rate of return. How much money would you have? I said, I don't know. And they said, you'd have $210,000. I said, wait a second. So if I just, for 30 years, put $7,000 in, I'd have $210,000. Got that. And if I invested it at a 10% rate of return in the future, I'd have 1.1 million, almost $1 million more dollars, meaning it's almost $1 million more dollars of work I didn't have to do. Like, how long would it take me in my head, what I was thinking, to get to $1.1 million by not investing? Because at that time I didn't know about investing. So I'm like, okay, pretend I didn't do it. What if I saved like $30,000 a year? Something wild at the time. Well, if I saved $30,000 a year, I still would have less money than if I invested well. And then what if I could save $30,000 a year and got that same return? Well, then it shows $5 million. So this was making me think, wait a second. So if I personally put $200,000 or so in, I would have $1 million or so dollars. That's $800,000 of work I did not have to do. That's when it clicked and I went, okay, 7,000. Well, then I was like, what about taxes? And then that's when I would show, and I would Google search with, I go max Roth IRA contribution, $7,000. So if you're under 50, assuming you're within this income limit, and if you're graduating college, you're probably not making north of $100,000 plus dollars. I'll tell you the exact amount in just a second. But $7,000, that's the most you can put in a Roth IRA if you're under age 50. Now, if you want to know the exact threshold, meaning what you cannot go over, you can see here, and all of this, once again, is available in my Early Retirement Academy. If your income, as you can see here, to do a Roth IRA is above $150,000, you cannot do a full Roth IRA contribution. If it's between 150 and 165, then you can do a partial. And if you're above 165, you phase out, meaning you're ineligible to do a Roth IRA. And that's based off your modified adjusted gross income. So what I'm not going to get into today is the standard deduction and how taxes work, but this is specifically just on Roth IRAs. And so this is all tax-free. This is money you would hypothetically, if you put $7,000 in for 10 years, a 10% rate of return for 30 years, you'd have over $1 million. And that's when I went, wow, okay, so this is what life, I could be a millionaire, and it didn't seem that difficult. And that's when it clicked for me. So hopefully if you're watching this and this clicked for you, it's time to start investing, getting the Roth IRA, the brokerage account, starting to look into these things. What I am going to do, because I'm obviously making these videos on YouTube and I don't have an hour, 2 hours with you, is these are guides that should help make sure you don't forget something. You don't have to do everything in here, but what issues should I consider when starting out financially? So review a balance sheet. What's the difference between asset and a liability and net worth? Review a cash flow statement. These are things that I go, yeah, you could look into them, but to be honest, I would want you to look in and know the definitions because it's important to be educated, but you don't need to become an expert by any means. Because I find when you try to become an expert, what happens is you get that analysis paralysis and you go, oh, there's just so much to this. I don't know. And then you give up. And I don't want you to give up. So looking through this guide here, consider specific, measurable, attainable, relevant, time-based goals. Right now, how much income is coming in? It's your first job. We have other flow charts of how do you review a pay stub? Are you expecting gifts or inheritance? Do you have a budget? Have you ever budgeted? Do you need to distinguish between your financial wants and needs? There's a lot of good stuff in here. So this is something that I would definitely recommend you check out if you are starting out financially. And then another guide, and this is for all of you parents who may have shared this video, this is general issues. What issues do you need to consider as your child becomes independent? Health records, making sure that health, academic, financial, do you have a spot for everything? Is your child attending college? Did they just graduate? So reviewing requirements along those sides. Is your child still going to be on your health insurance? What if you retire? Tax issues in terms of claiming them as a dependent. There's a lot in terms of, do you guys own a business? Are you going to move? There's tons of things to consider. So this is almost like a catch-all guide. I don't want you to use that as that's going to tell me everything I need to know and I'm going to be good, because it's not that simple. But this hopefully resonated where if your parent told you to watch this video and it resonated, please let me know and just leave a comment below. If you're the parent watching this going, my child needs to hear this, and you want to just relay the information, but hopefully the way I shared it there just helped, beautiful. I just want to make content that hopefully allows you all to take action. So I know not my traditional video, but all of these flowcharts and checklists, there's hundreds of them. They're all in the Academy. And then this link is very simple, just fncalculator.com. And I clicked on the first one here, time value of money calculator. There's a lot to this. I love this rule of 72. I mean, there's so much I'd want to go over with you guys and have maybe a future course of getting started financially. But that's just what I wanted to make today, because if I would have seen this when I graduated college, I would have been in a very different position, because it would have led me to take action and I would have way more money than I have now. So I hope all of you can save and invest for a wonderful future. And if you choose to share this, please let me know if it was helpful by dropping a comment below, and I'll see you guys next time.